Right, guys, today we're going to be talking about the importance of a trading plan and a trading strategy. All right. Now, you might be familiar with the phrase trading plan. If you're not, I'm going to cover the advantages of having one today. All right. So, a few important factors to cover is your plan must be custom to you. All right. Don't follow someone else's trading plan or strategy. For example, I showed you how to do a break and retest strategy the other day. Now, I also said in that video to add or replace your own confluences to that strategy, okay? Because that strategy I shared was custom to me. All right? I'm comfortable with trading that way. So you might want to eliminate maybe, the rejection level. I normally wait for 3 rejections. You could maybe wait for 2. All right, it's got to be custom to you. All right. Second point: don't listen to others when they comment on certain aspects of your plan or strategy. Now, that's a very important point there, okay? Because you might say, for example, let's set a scenario here. You're a new trader and you're friends with someone who's been trading 3 years. All right. So the first thing you have to take into account is they got way more experience than you. Okay, you're just starting out. So, for example, you're in a chart and you've mapped out a support zone. Okay, so you've used the rectangle feature to map out a zone. They come along, have a look at your laptop or computer, and they say, no, you shouldn't be doing that. You should be mapping out a level. Okay, so using the horizontal line to cover that support line or zone, wherever it is. Now, you need to remember, don't listen to them, okay? Because that's how they trade. All right, that's not how you trade. Now, if you change that, you're now, you're going into a new area that you may not be comfortable with trading, okay? So stick with your zone, screw what they say, and crack on with developing your own plan or strategy, okay? It has to be custom to you. Forget everyone else. This video is about you watching, okay? Now, third point, journaling. Very important. Journaling is a way to, put your trades down on paper, all right? Very good for seeing where you're going wrong in specific areas and seeing how you can improve, okay? So my own specific journal, I jot down the pair I'm trading, I jot down the direction whether I'm buying or selling, I jot down an entry date, an exit date, my stop loss in pips, my overall result, whether it was a win or loss, my percentage gain, a before screenshot, an after screenshot of that trade, the time frame that I traded on, my risk to reward in percentage, now, and also my potential risk in pounds, my potential gain in pounds as well. And at the end, I like to jot down notes of that specific trade, sort of my thinking towards it, what I was thinking at the time, so I can look back on it, see how my mindset was playing out as I took that trade. All right, because at the end of the day, if I lose that trade and I can see the way I was thinking, I can say, look, I shouldn't have been thinking that way when that setup was taking place. Because remember, I've added screenshots before and after I took the trade. All right, so journaling is a very key point if you want to look back on how you used to think, all right, or things you maybe want to change. Yeah, you catch it out by journaling your trades. Now, fourth point is keep your rule book. Now, it's very important, okay, because say for example you've set out a list of rules, in your plan, and let's say you've lost a few trades, yeah. Typical human emotion is to be flustered by those losses and think, I'm not good at trading anymore. So what you're going to do, you're going to go back in the markets and you're going to start putting on silly positions to try and win that trade, try and win that money back. Okay, it's called revenge trading. Guys, keep to your rule book, okay? Losses happen. Mentally get that into your head. Losses happen, okay? If you divert from your rule book, you're going to lose more money. That's what you got to start thinking, okay? Because you're not setting up a trade as you would according to your rule book, which means you're now outside of your area of comfort, which is going to result in a loss, okay? A win if you're lucky. Do not do it. Do not keep to your rule book. You've made those rules for a reason, okay? You sat down, you came up with a plan, you came up with a strategy, you back tested it, you've put those things in place for a reason, okay? You need to remember that. All right? And the reason is you're comfortable with that plan or strategy. All right? If you start diverting out of it, you're in new area here, and you're not going to be comfortable because you don't know. You haven't back tested whatever it is you're trying to do to get that money back. Okay, do you see where I'm going with that? Cool. So what does a trading plan look like, and what does it entail? So this is my trading plan here. All right, I've jotted down, the main points of my trading plan, just to show you guys what it is. So, in simple terms, a trading plan is it's a routine. All right, so something you do every day. Now, these things can change according to what best fits you. Okay, so me personally, I wake up 7:15 a.m. Monday to Saturday. I like to shower, have breakfast, have coffee, maybe listen to a podcast before 8:30 a.m. All right. I like to open up my charts 8:30 a.m., prepping to take any positions at 9:30 a.m. All right, so I want to wait for some nice movements from the Open London session. That's why I trade at 9:30 a.m. Okay. Now, I could also be putting on trades that I've maybe analysed the night before and maybe looking to enter when London session opens. All right. So I like to trade between 9:30 a.m. to 4 p.m. All right. I don't put any trades on past 4 p.m. because ultimately I don't like to be in the market when the Asian session opens. I just don't like it. It's uncomfortable for me, so I try and avoid doing it. So I like to get out before 4 p.m. I don't trade Mondays. Now, from my personal experience, Mondays have always been a bit slow, or I've had bad results trading Mondays. And as I said, when something goes wrong in your plan, you make changes to fix it. Now, I kept seeing a lot going wrong on Mondays, so I tried to fix it. It didn't work. So my next step was to get rid of it completely, eliminate that factor, and that's what I did. So I eliminated Mondays from my trading plan, and since I've done that, I'm a better trader. I've been profiting a lot more from my trades. Okay, from Tuesday, Wednesday, Thursday, and Fridays. So already I've made myself better by eliminating the thing that was causing me a problem. All right, and I only was able to do that through my journal. All right. If I've been analysing charts for more than 2 hours, I'd like to take a 15, 30-minute break. Fresh air, TV, music, coffee, anything. Just take my mind off the markets and stay fresh. Okay, because that break gives your brain a rest from the markets. So, say for example, we're coming up to the end of that 2-hour period. You're staring at a chart. Yeah, you're staring at probably one of 50 charts you've been looking at for that day. Yeah. That 15, 30-minute break, gives your mind a rest. You forget about the charts for 15 to 30 minutes. You come back, and you've now got that brand new, fresh mind perspective. So you might see things you did not see because you were so drilled in on that chart at the end of the 2 hours. You've taken a break, you've come back, and then you see some obvious things you probably weren't seeing before. That's the important thing I like to involve in my day, is taking a 15 to 30-minute break after every 2-hour interval I'm in the markets for. All right. So when I have no positions I'm watching, or I just have no interest in the markets on a specific day, nothing's really setting up, taking my fancy, I like to crack on with tasks such as backtesting strategies, and also making my journal up to date. So I backtest new strategies. I backtest strategies I'm using already to try and fine tune them a little more. And I also like to make sure my journal is up to date, because sometimes I might get sidetracked and I might not complete a specific part of my journal. I just like to make sure it's up to date and I don't miss any key information. So, and at the end of each week, I like to reflect back on my trading week and see if there's any areas I can improve for next week. Yeah, so what did I do well, and what could I do better next time around? All right. So, say for example, I entered a position. I entered, maybe too late on a trade, and the market was, say, 10 pips away from my entry. I entered anyway. See, now that was emotion taking over, and I'll jot down in my journal, entered way too early, position, trade didn't work out, ended up losing. I now know why I've lost. Okay? So that's my trading plan. That's what a plan looks like. Try and come up with your own. Maybe screenshot this and see if you can make up your own trading plan based off this. All right? So what is a trading strategy? So alongside with the strategies I've shown you already, you've got break and retest. You can trade the exponential moving averages. You can trade the MACD. You can trade pure price action. You can trade candlesticks, open and closes, highs and lows. You can trend trade with a trend line. You can do RSI trading, Bollinger Bands. There's so many strategies you can do, but you have to find a strategy you're comfortable with executing. All right. So maybe trading candlesticks isn't your thing. Yeah, you're not comfortable with it, because the last thing you want to do is, find a new strategy. Say for example, candlesticks. Yeah. Say for example, you found a new strategy, you're interested in it, it looks good, it's been working for a YouTuber you've been watching. Yeah. And now you're in a live market. Let's say you've never back tested this before. You're in a live market and you are about to execute a trade. All right. There's no worse feeling in the markets of doubt and uncomfortableness. That's probably not even a word. And the feeling of being uncomfortable. All right. Because you've not back tested it and you've got no confidence in that strategy, when you're clicking buy or sell on your app, you're going to feel really tense and you're like, oh, what if I lose? Yeah. If you're getting that feeling, guys, do not execute that trade. Go and back test it first. All right. Or maybe even watch that trade play out, pretend you entered, and see if you can gain some confidence in that strategy. That's why I say, when you've got a strategy, you need to back test it, add or eliminate confluences that make you comfortable with using that strategy. Okay. So how do you backtest? Got that question a lot through email, actually. I've been mentioning it in my videos, and not many of you know what it is. So there is a tool on TradingView called, it's a replay tool. All right. I think it's along the top bar. And what you can do is sort of, you go back in time on the chart and set up specific strategies. Maybe you're setting up a break and retest. So you would go back in time, map out your zones, and you can basically replay trades that have already played out, but you can see how that trade would have panned out had you entered it at the time. All right. Now, important thing to do when backtesting is don't just look for setups that win. All right, because the only person you're cheating is yourself. All right. Look for setups that lose. Okay. Get a realistic perspective on it. All right. Once you're comfortable with a strategy, once you backtested it, stick to it. Okay. Fine tune it, improve it, journal it, see what you can do better next time. All right. The discipline and thought of not sticking to your strategy will possibly eliminate the chance of you taking silly positions or even revenge trading. All right. Once you've got that discipline, there'll be a very horrible feeling in you when you go against your plan. You know you're going against your plan. There's a little voice in your head saying, don't do it. All right. And that little voice could be enough to save you making silly mistakes and losing money because you're trying to divert from your trading plan. And the final point is, remember to tick all possible confluences included in your specific strategy. So what I mean by that is, say you're trading the break and retest strategy. What you'd want to look for is, obviously, you'd want to look for a trend direction. You'd want to look for a break of a support resistance zone. You'd want to wait for a clear break, a retest, multiple rejections, and then you want to enter. They're your confluences for a break and retest. All right. So say, for example, you want to get rid of a confluence. So for me, I like to go off of 2 or 3 rejections of a new level that has been broken out of. Okay. You might be comfortable with either waiting for a 4th rejection, or you just go off the 2nd rejection. All right. You might not even wait for a rejection at all. You just wait for it to hit that new level, and then you're in the trade. All right. But it's got to be, you've got to be comfortable doing that. I'm personally not comfortable with executing a trade literally just because it's touched a new level. I'd wait for a rejection. Do you see how it's got to be, it's got to be custom to you? Yeah, you've got to put your own spin on these strategies to see results for yourself. Okay. This game of trading is about you. Okay. It's how you beat yourself. All right. And it's a big psychological game, as I mentioned before. It's you versus you. All right. And if you are diverting and cheating yourself by going out your strategy and your plan, who's losing there? It's only you. Okay, so don't worry about other people. Come up with a plan, fine tune a strategy, maybe even make your own strategy. Make sure you're comfortable with trading it. Okay, make sure you're comfortable with waking up every day and sticking to that plan. So now we've seen a plan, now we've seen a strategy, now it's time to combine the two. All right, and what you do when you combine it is you stick to it. Okay, so journaling your trades will help you to identify potential weaknesses in either your plan or your strategy, allowing you to make small changes along the way. As I mentioned, when you jot down your notes, you look at those before screenshots, after screenshots, maybe look at your stop loss, you can see whether it's the plan or your strategy that is affecting your win rate in trades. All right. Review your journal after a set period of time to evaluate any possible changes. Now, this all depends on what sort of trader you are. You know, if you're a day trader, you could probably evaluate it after 1 month. If you're intraday trader, maybe evaluate it after 3 months. Swing trader, 6 months. Okay. Guys, this next point is very important. You will break the rules at the start. You will break the rules further along down the line. It doesn't matter. It's human nature. Okay, you can't get rid of the emotional side of trading. All you can do is numb it a little bit. Yeah. Don't beat yourself up about it. Okay. Don't lose a trade and, you know, because you entered too early or whatever. You know, don't beat yourself up about it. You made a mistake. Big deal. Yeah. If you've got good risk to reward on, you'll make up that loss very quickly. All right. That's the importance of a plan, is you can back yourself up when you make these mistakes. Yeah. It's important. Many people make a mistake very, very early on, and, you know, say for example, they're not familiar with risk to reward. They lose a lot of money and beat themselves up about it. Go away, leave trading alone, and call it a scam. Yeah. Well, it's not a scam. You just didn't have a plan, and you didn't. You know, even if you did have a plan, you didn't stick to it, and you didn't follow the confluences of your strategy. Okay. You also didn't have good risk to reward. Yeah. Because if you lose a trade and you've got 1 to 3 risk to reward as your minimum, you know, if you win a next trade, you're up 2%. Okay, that's the importance of a plan. Yeah, if you can trump each mistake, yeah, there's always a backup in play. You've just got to play the right card. The ace in the hole, yeah, as the good old Joker says. So once you get into the habit of sticking to your whole plan, you'll become a better trader. So as I mentioned to you guys prior, I found myself entering a trade a little sooner than what I would have liked, and ended up losing that trade because price didn't come to my level, and my emotions took over and I entered the trade. All right, I lost, but I jotted in my notes exactly that scenario, and now I know not to do it that next time. All right, now I know, wait for that confirmation of it hitting my level and then enter. Yeah, so that's made me a better trader just by taking something from a loss. Okay, so if you've got, say for example, you won 12 trades, you've lost 8, yeah, focus on those 8 trades, use the before screenshot and after screenshot, and try and take something from it. Okay, because once you take something from that loss, you know how to avoid that loss next time, and you've become a better trader. All right, so make any proposed changes and watch your results grow. And I'm not just talking about trading wins, but I'm talking about from a psychologically and mental perspective, you'll start making better, more concise decisions. Yeah. Again, what I mean about taking something from losses or maybe making small changes to your trading plan is psychologically you become more in tune with your plan or strategy, and you know, it's sort of like you're creating your, you know, you're making your memory remember the mistakes you made, and when you come across the same scenario next time, because you know you've journaled it and you know what you're looking out for next time, your brain is saying don't do it. Yeah, you're training yourself to look out for these errors. All right, that's the importance of a trading plan. All right, and that's how it can help you guys. So that is the end of this video, guys. Now, if you want me to help you with a plan or strategy, or you want me to sit down with you, well, not sit down, it's COVID. If you want me to jump in a Zoom call with you and break down your trading plan to see any possible areas of improvement or any strategy you're taking on, you want me to see if I can possibly improve it for you, either leave a comment down below or email me. There's my email there, and I'll more than I'll be more than happy to sit down and see if we can improve your plan or strategy, and maybe see how the results pan over time. All right, so guys, thanks very much for tuning in, and I will see you in the next video.